It's Tuesday morning, and as we head into the new session, Opendoor finds itself at a fascinating moment in its recovery story. After an explosive Monday rally that saw the stock surge more than 14%, closing at $9.29 a share, we saw a modest cooldown in the after hours, down just a few cents. That's not a sign of weakness. In fact, it looks more like a breather after one of the strongest single-day moves we've seen in months. The question on every investor's mind right now is simple. Was Monday's rally a one-off? Or is this the calm before another move higher? To answer that, let's step back and look at the bigger picture, the underlying momentum that's been quietly building around Opendoor. When we look beneath the surface, there are multiple forces converging at once: leadership, innovation, investor sentiment, and perhaps most importantly, smart money quietly positioning itself for the next leg up. Let's start with leadership. CEO Kaz Nejatian continues to prove that he's not just managing Opendoor, he's rebuilding its culture and narrative from the ground up. Over the weekend, Kaz announced a major new addition to the executive team, Morgan Brown, who's joining as Chief Growth Officer. If that name sounds familiar, it's because it should. Morgan Brown co-wrote the book Hacking Growth, which has become a kind of playbook for Silicon Valley startups looking to scale quickly and intelligently. His resume includes senior roles at Meta, Shopify, and HubSpot, some of the most successful software growth stories of the last decade. This isn't just a hire. It's a signal. It tells investors that Opendoor is no longer simply trying to stabilize after the chaos of the housing downturn, it's preparing to accelerate. To rebuild its growth engine. To take what it has learned from years of operational refinement and turn it into momentum. Kaz called it a big step, and he's right. This move could reshape how Opendoor grows users, drives transactions, and markets itself. But that's just one piece of the puzzle. At the same time, Kaz has been making waves in the fintech and crypto space. On X, formerly Twitter, he publicly responded to a post suggesting that Opendoor should allow buyers to use Bitcoin or other cryptocurrencies to purchase homes. His response was simple: we will. Just need to prioritize it. That one sentence says a lot. It's forward-thinking. It's confident. And it suggests that Opendoor is already exploring what could be one of the biggest innovations in real estate, the ability to buy and sell homes using digital assets. Then came the kicker. Robinhood CEO Vlad Tenev responded, saying he could help. Kaz immediately replied, "Let's talk. DM's open." That brief but powerful exchange between two fintech leaders didn't just generate buzz. It represented something deeper, the potential merging of two ecosystems that have both transformed how people approach major financial decisions. If Robinhood was the company that democratized stock trading, Opendoor might be the one that democratizes real estate, and if those two platforms find ways to connect, even loosely, the possibilities could be enormous. What we're seeing, then, is a company that's reasserting itself as part of the next wave of tech-driven finance. And the market is beginning to take notice. Monday's 14% rally didn't come out of nowhere. It came on strong volume and with clear conviction. And yet, even after that massive move, there wasn't a rush for the exits. That tells you that institutional investors, the so-called smart money, are not selling into this rally. They're likely building positions quietly while retail sentiment continues to strengthen. Remember, we've had a series of bullish signals in recent weeks. Eric Wu, one of Opendoor's original founders and now a board member again, bought more than 300,000 shares at $6.65 apiece. That's his second major insider purchase since returning to the board. Insiders don't buy for short-term gains. They buy because they see value others don't. Then there's Jane Street, the quantitative trading firm that recently disclosed a position of roughly 44 million shares. That's not a casual bet. Jane Street specializes in high-frequency and arbitrage strategies, but it also understands long-term potential when it sees asymmetric opportunity. Between insider confidence and institutional positioning, there's a growing sense that Opendoor's risk-reward profile has quietly shifted. But what makes this moment even more interesting is how the narrative itself is changing. For years, Opendoor was labeled as a home flipping company, a real estate play. But over the past few weeks, that perception has started to evolve. Media outlets like Motley Fool and others are now referring to Opendoor as a potential growth stock, not just a housing company. That's a subtle but critical shift. It suggests that the market is beginning to see Opendoor for what it's becoming, a technology platform operating within real estate, not a real estate company dabbling in technology. It's the same kind of evolution we've seen with companies like Tesla, which started as an automaker but was later recognized as a software and energy platform. When sentiment starts to change like that, it often precedes price action. Now, let's talk about why the consolidation we're seeing today could be setting the stage for the next move. After a run-up like Monday's, a slight pullback or sideways action is normal. Stocks need to catch their breath. But more importantly, it gives institutions a chance to accumulate shares without chasing price. If you look at the chart, Opendoor has spent most of the last 2 months building a base between $7 and $9. Each time it's dipped below that range, it's found strong buying support. That tells you there's real demand beneath the surface. And with short interest still elevated, even a small string of positive catalysts could trigger another wave of short covering. This is where things could get interesting. Because as we move deeper into the week, there's anticipation building around what comes next, whether it's more updates on product development, partnerships, or early indicators that the new growth leadership is already influencing operations. Even subtle updates, like Kaz's focus on improving communication with retail investors during earnings calls, are starting to create buzz. He's said he wants to open up the Q&A sessions so that everyday shareholders can directly ask management questions. That's something we almost never see from a company of this size. It's not just transparency, it's an acknowledgement that the retail community matters. That the open army matters. That kind of engagement builds loyalty, and loyalty fuels long-term conviction. And while the crypto conversation is still early, it fits perfectly into Opendoor's broader vision. Imagine a future where you can connect your Robinhood account, convert a portion of your crypto holdings into a home purchase, and manage the entire process seamlessly through Opendoor's platform. That's not science fiction. It's a natural evolution of Fintech, and Opendoor is positioning itself right at that intersection. Combine that with AI-driven pricing models, instant home valuations, and predictive analytics, and what you get is a company with the potential to transform how we buy, sell, and finance property. And this is why Monday's move feels different from past rallies. It wasn't driven by hype, it was driven by substance. Leadership changes, insider confidence, institutional alignment, and strategic vision are the kinds of things that create real momentum, not just for a day, but for a trend. So where does that leave us heading into Tuesday's pre-market session? It leaves us with a company that's fundamentally stronger than it's been in years, a leadership team that's executing, and a retail community that's engaged and optimistic. If the stock continues to consolidate around these levels, it could form the base for another leg higher. Shorts who are betting on a fade after last week's rally might find themselves in a tough spot if momentum returns. Remember, it's not always the explosive green days that matter most. It's what happens during the quiet periods in between. That's when the real positioning happens. And right now, the quiet accumulation we're seeing, from insiders, institutions, and long-term believers, could be laying the groundwork for the next breakout. Opendoor has gone from being written off as a failed home flipper to being viewed as a potential tech disruptor again. Kaz's bold moves are reshaping how investors see the company, and the market is starting to take notice. If Monday's surge was the spark, then Tuesday could be the moment where we find out whether this rally has real legs. So as we head into the session, keep your eyes on volume, watch how the stock behaves around that $9 mark, and pay attention to whether buyers start stepping back in as the morning unfolds. Because all the pieces, from leadership to sentiment to institutional positioning, are starting to align in a way we haven't seen in quite some time. And that's why, even after a huge move, the smart money isn't taking profits. It's still loading. This is the calm before another move.